All right, so what we're going to be doing as the sun is my eyes here is I'm going to just be taking a look at what is the most recent updates here. So we've got our article on the Bank of Canada's website. We will get our announcement very shortly coming through at 9:45 Eastern Standard Time. So at 8:15 this morning, the journalists were invited to review the rate announcement press release under the embargo. So they know what's going to happen. Whether we have any idea what is going to happen here, it's still up in the air. I think we're kind of at a 50-50 point where a lot of people are thinking maybe they just wait until July to do this rate announcement and make it a decrease of 0.25%. And then the other half of the pool is essentially saying, let's just do this rate decrease now, get some more buyer activity in the market, because we are seeing very, very low activity in the real estate market right now. So let's see if maybe this can pump things up a little bit. So the press release will be available at 9:45 on the Bank of Canada's website. At 10:30, Tiff McCallum, the governor of the Bank of Canada, and Carolyn Rogers will hold a press conference. So they will be kind of breaking down their decision on whether they increased or decreased the interest rates here. Whether we see that or not, I don't think it's going to make a massive difference in the real estate market itself. The thing that we're going to have to understand is there's only so much that we can adjust the rates right now. If we were to drop the rates 3 to 5 to 4. Sorry, guys. Just got another message in the middle there. So if we were to drop the rates 3, 4, 5 times consecutively, I think what's going to happen if we have something like that is we are going to see the market spike up, which potentially could be a good thing for some people and a bad thing for others. The last thing we want to have happen is the housing prices to shoot back up again. Although I'm a homeowner and a lot of people who are watching this might also be homeowners, we want to make sure that the market is not out of control. As it is, it's very difficult to afford anything on the market right now. So if we've got people who are, sitting around and hoping that the prices shoot up so they can make some money on their home investment, it's a nice thought, it's a nice sentiment, but at the end of the day, if that does happen, we're going to see even bigger issues. Now, there has also been some talk that what could happen here is the fact that we've got, unfortunately, communication with the US when it comes to trading and our trading partners. If we don't raise the rates and stay on par with them, potentially our dollar stays at the same value. Whereas if we do this rate decrease here, even if it's just 0.25%, we might actually see a little bit of a fallback in the Canadian dollar. A lot of economists are saying that potentially if we see multiple rate decreases on the Canadian side and the US doesn't follow suit, we might see the Canadian dollar hit as low as 60 cents, which would be something we haven't seen since, I believe, the 90s, which is extremely worrisome. Let me just open up the Bank of Canada website here and see if we have any new updates here. So as we're pulling it up here, the latest update we have from the Bank of Canada is that embargo ends at 9:45, and then there will be a press release to follow. Let's see if there's anything else going on in the web. Maybe some of these embargoes have been released. Who are we going to get? We've got an update from the Bank of Canada, to cut or not to cut. So let's see, what does City News Vancouver have to say about this here? So City News, to cut or not to cut? That is the question. Yes, that is a big question, City News. What do we think? What does City News think here? How do we get into this article here for City News? All right, so let's see what City News thinks. So this was done at 1 a.m. this morning. To cut or not to cut? That is the question. Bank of Canada will answer this morning at 9:45, as we know, and then the press release will happen shortly thereafter. So let's see. The forecasters are widely expecting the central bank to lower the key interest rate by 1/4 percentage point, which would mark the first rate cut in more than 4 months. which would be nice. The Bank of Canada key interest rate is currently sitting at 5% and the highest it's been since 2001, which, 23 years. It's a long time for us to be at this point. Economists say that noticeable slowdown in inflation as well as the economic weakness justifies a rate cut. Now, let me just say it is definitely weak out there. The economy is not booming as they're going to say it is. It is tough sledding for a lot of people trying to figure out what they want to actually use their hard-earned income on. If the Bank of Canada does opt to lower its policy rate, it would be moving ahead of some of its central bank peers, including the U.S. Federal Reserve, which we already know the U.S. Federal Reserve is not going to be making a rate cut right now. It doesn't sound like we're going to get a rate cut in the US until potentially September, maybe October. So if Canada does beat them to the punch, maybe it is, the one-off time where we separate and do our own thing. As it's saying here, it's a very short article. If Canada does opt to lower the policy rate, we're going to, take a stance that's further ahead of US, and we're going to see that result coming through here very shortly. Let's see what other articles are out there, if there's any new updates that have just come in. We've got about 5 minutes here until we do hear from the Bank of Canada. So let's take a look on X and see what is happening on X and see if we can't get some inside info a little bit early here ahead of time. So just 30-minute long answer question. Ben and Trudeau basically stared at their shoes. Well, Brian Platt is just talking here about something that's a little bit unrelated, so we're not going to bother there. Let's take a look at what Yahoo thinks of the potential rate cuts here. Let me share my screen with you guys here. Bank of Canada interest rate. So Yahoo, what are they saying? So they came out 10 minutes ago here with another article. So Bank of Canada is set to issue a highly anticipated interest rate announcement today, 9:45 Eastern Standard. The central bank has held its benchmark interest rate at 5% since July of last year and is said to be looking for evidence that the easing of inflation is sustainable before it cuts the rates. A lot of people, myself included, would appreciate a rate cut. Don't get me wrong, but I think it might be the wrong decision right now. I think it would be better served to wait until at least July or potentially wait until September. I think generally our real estate markets are slower in the summer. So if you can push this just another 30 days into July when the markets are generally slower, and then we might see a little bit of buyer sentiment come in and, spike the market a little bit. Maybe we won't see the same craziness, for lack of a better word, because I think there is a chance that there's going to be some really stupid buyers, for lack of a better way to phrase it, that are going to see a quarter point reduction. And now they're going to jump into the market thinking that that makes a massive difference from 24 hours ago. And ultimately, it doesn't make a massive difference from 24 hours ago. If you've got a 0.25 reduction in your overall variable rate, you're talking $50 to $70 a month. So it's not going to save people a big amount. And that's basing it off of like a $500,000 mortgage, for example, which is probably your average mortgage that people have right now, about $500K. Your average to get in the market in the GTA is about $750 just to get yourself in the market. Assuming you had a $200,000 down payment, you might have a $500 or a $450 balance on your mortgage. So you might be looking at $50, $70 that is going to be put in your pocket. Let me know what you think. Whoever's on here on the live stream, do you think we're actually going to get a rate cut here in 3 minutes? Or do you think it is better served for us to wait a little bit longer? It's going to be one or the other. It's going to be today or it's going to be in July. That's basically what it's coming down to here. So most economics argue that the evidence is here. Canadian inflation rate has slowed 2.7% in April, and the measures of core inflation also eased. The economy grew at a slower pace in the first quarter of the year than what economists and the Bank of Canada expected. All while Canada's labor market added a surprise 90,000 jobs in April. Underlying weakness reinforced the economic slack still rising. Money markets have priced in 80% probability of a cut as of Tuesday. So we're talking about a 20% chance they don't do this, which is pretty big for a lot of people. According to Bloomberg, the last time the Bank of Canada cut its policy rate was in March 2020. We know when that was and what happened in March 2020 in response to COVID-19 pandemic. So we're going to follow along here for live updates. So we are 2 minutes out. Let me update the the Google search here and see if we get anything new that's coming in last minute here. So 2 minutes ago, Bank of Canada, 2 minus 3 minutes, Bank of Canada announcement. 19 minutes ago, Yahoo, Globe and Mail. Let's take a peek here. Let's see. But with 1 minute remaining, BNN, Bloomberg here, the Daily Chase. So the decision on this end, the central bank will announce the latest rate decision at 9:45 this morning. Obviously, after the bank has raised rates its current level of 5% last summer, we spent much of last year wondering, okay, this is important to know. Canada's housing market has just received the May data, and it shows price slumps and sales have kept sliding. It has not gotten any better. One part of the economy that would very much benefit from a rate cut would be the housing market, of course, in Canada's biggest city, where new numbers released this morning showing a slowing in Toronto prices, and Toronto inching lower, and volume sales continue to slide as well. The local real estate board said this morning that the seasonally adjusted benchmark selling home price has slipped. So we are at 9:45 here. What is our update? What is the Bank of Canada telling us here? So at 9:45, Bank of Canada adjustment. Are we getting it? Are we not? Let's see. Let's hop on the okay, let's see if we can't find the article here. Boom. There we go, guys. The policy rate has just gone down. We have seen the policy rate go to 4.75%, down from that 5%. So if you are, here we go, Bank of Canada reduce the policy rate. Let's read this one here. All right, guys, this is your update here. This is the immediate release. So the Bank of Canada reduces their policy rate by 25 basis points. Anybody who has a variable rate mortgage, like myself, you can take a deep breath. You can now save yourself just a little bit of money. It's not a lot. It might cover your internet bill, but it is something. And maybe we see some buyers, activity that hops into the market. So Bank of Canada today reduced its target for the overnight rate of 4%, with the bank rate at 5% and the deposit rate at 4.75. So we're down to 4.75. Bank is continuing its policy of balance sheet normalization. The global economy grew by about 3% in the first quarter of 2024, broadly in line with the Bank April monetary report policy projection. In the United States, the economy expanded more slowly than was expected as weakness in exports and inventories weighed on activity. Growth in private domestic demand remained strong but eased in the euro area. Activity picked up in the first quarter of 2024. China's economy was also stronger in the first quarter, buoyed by exports and industrial production. Although domestic demand remained weak, inflation in most advanced economies continues to ease, although progress towards price stability. It's going to be a bumpy road, and it's proceeding at different speeds across different regions. And oil prices have averaged close to the MPR assumptions, and financial conditions are a little changed since April. So if you're just hopping onto the live stream here, Bank of Canada did in fact lower the policy rate by 0.25%, which means if you are on a variable rate mortgage, you are going to see a little bit of a reduction and a little bit of ease in your payments, which is fantastic if you are in fact on a variable rate mortgage like myself. So in Canada, economic growth resumed in the first quarter of 2024 after stalling in the second half of the last year at 1.7%. First quarter GDP growth was slower than forecast in MRP, weaker inventory Labor market shows business to continue higher. Let's see what else they've got to say. Let's see something a little bit more here. So with the continued evidence that underlying inflation is easing, the government council agreed that the monetary policy no longer needs to be restrictive as it was and reduced the policy rate by 25 basis points. Recent data has increased our confidence that inflation will continue to move towards the 2% target. Me personally, I think the 2% target is not realistic. They maybe need to bump that up a little bit, but it is what it is. Nonetheless, risk to the inflation outlook remain. Governing council is closely watching the evolution of the core inflation and remains particularly focused on the balance between demand and supply in the economy, inflation expectations, wage growth, and corporate pricing behavior. The bank remains resolute in its commitment to restoring price stability for Canadians. So there you have it. We do have a rate reduction by the Bank of Canada. If you have been waiting for this for some time, maybe to get yourself into the market, then here you go. There's not much else you can ask for. Will we get more rate reductions in the future? Absolutely. Right now, we are looking at potentially seeing, 2 rate reductions in the next 2 announcements. So we might get one today and potentially another one in September if this one does go well. The chance that we see a rate reduction, following today in July is super slim. They definitely want to do this at a pace where they can see what's going on. We don't want to see another rate reduction in July and then all of a sudden the real estate market spikes right back up like a hockey stick again in Ontario or in Canada, depending on what market you are in. Me personally, I am in Ontario, and our market has kind of been lagging over the last 4 to 6 months even. Since January, we have definitely seen a steady decline in the amount of people who are willing to transact. We've got historical levels of condo inventory out there, and unfortunately, with the new things that the government's implementing here, you've got at the end of June more capital gains tax that is being increased. So, 0.75% is what you're paying on these capital gains going forward if you are trying to make some money as an investor. So we've kind of started to push investors out of Ontario and out of Canada. And this move here is really being done so we can see some more movement in the market because it is just stale out there. Even if you want to get a really good deal right now, there are so many condos in Ontario that you could snatch up for a fantastic deal, 50, 70, 100 grand under the list price. But people are just not willing to pull the trigger until we get an announcement like we had today. So if you just tuned in, the Bank of Canada did make that rate reduction of 0.25%. Take your deep breath. You save a little bit of money. If you do want to wait on for the press conference, that's not happening until 10:45. So it'll be a little bit of time, or 10:30, my apologies, for that press conference to hop on. If you've been watching the live stream here, thank you so much for watching. And I hope you have a wonderful day. You'll see a YouTube video live on my channel in the next 24 hours on my full overall opinion on what this is going to do to the real estate market, especially since we now have just received the May data for the GTA. So I'll be breaking down the Toronto real estate market, the Brampton real estate market, Mississauga real estate market, the Waterloo real estate market, and the Georgetown real estate market. So I'm going to be breaking down different markets in specific videos, but you will see a Bank of Canada breakdown as well as a GTA market update on the channel very soon. If you're interested in the real estate side of things, don't forget, subscribe to the channel. I am a real estate agent that is located in the Greater Toronto area, just hoping to keep everybody engaged in the real estate market and updated with what's actually happening. So if you have just tuned in here, let me share the site once again. The Bank of Canada has, in fact, reduced their policy rate to 4.75%. So you now have a 0.25% reduction in your overall rate. So if you are on a variable like myself, and I will keep saying it because I'm a little bit excited that I get to save $50 a month, the Bank of Canada has now reduced those rates, and you can take a deep breath. Hope you guys enjoyed this live stream. This was just a little quick one here. Thanks so much, and hope you guys have a wonderful day. Bye for now. Subscribe to the channel if you want more GTA real